Hello and welcome. Today we are diving into one of the most powerful, most timeless investment strategies ever created. It's a strategy designed to protect us from our single greatest financial enemy, which, it turns out, is ourselves. All right, let's get right into it.
This right here, this quote from the legend Benjamin Graham, is pretty much the key to everything we're about to talk about. And what's so amazing about this idea is that success in investing isn't really about being a genius. Nope, it's about having a system to control your own emotions when things get totally chaotic.
So what's the biggest danger to our long-term wealth? You might think it's a market crash, right? Or maybe a big recession. Well, according to Graham, it's not. The biggest danger is, quite simply, our own panicked reaction to that crash. His entire philosophy is built to solve this one single critical problem. Okay, so to build up our defenses, we first have to understand what game we're even playing. Graham drew a really clear, hard line in the sand between investing and speculating. On the one hand, you've got investing. That involves doing your homework, a thorough analysis, you're buying a piece of a real business, and you're hoping for a reasonable return. But speculating, that's just betting on which way the price will move, with no real understanding of the business itself. It's basically gambling.
Now, Graham was smart. He knew that most of us don't have the time, or frankly the desire, to sit around analyzing financial statements all day. So he designed a specific, super low maintenance and really powerful strategy just for the everyday person. And that's what he called the plan for the defensive investor. He basically broke it down into two types of investors: the defensive, or passive investor, and the enterprising, or active investor. Now, the enterprising investor is the one who's actively trying to find hidden gems and beat the market. But for our purposes today, we are focusing exclusively on the defensive investor, the person whose main goal is just to avoid big, costly mistakes by using a simple, automated system. To really understand how to manage the absolute madness of the market, Graham came up with one of the most brilliant and famous stories in the history of finance. It's time for us to meet your new business partner, Mr. Market.
So just imagine you own a piece of a business, and this guy, Mr. Market, is your partner. The only problem is, he's completely emotionally unstable. His wild mood swings dictate the prices he offers you every single day. And trust me, those moods are, well, they're extreme.
So on some days, Mr. Market is just on top of the world, absolutely euphoric. He sees nothing but blue skies ahead and offers to buy your shares from you at ridiculously high prices. He's practically begging you to sell them to him.
But then, on other days, he's an absolute wreck, totally terrified. He is convinced the world is ending, and he desperately tries to sell you his shares at rock-bottom bargain bin prices. He just wants out, and he doesn't care what it costs. And here is the crucial lesson in all of this. Mr. Market is there to serve you, not to guide you. His moods are not a signal for what you should be doing. In fact, you should probably be doing the exact opposite. His panic is your opportunity. It's a chance to buy into great businesses on sale. And his euphoria? That's your signal to be careful. Your job is to simply tune out his daily noise. All right, so how do we actually build a system that lets us ignore Mr. Market and even take advantage of his crazy moods? The answer is to put our entire strategy on autopilot. We have to remove our emotional, flawed human brains from the day-to-day decisions. Step 1 is a beautifully simple, balanced portfolio. Graham recommended a straight 50-50 split. That's 50% in stocks, which gives you that potential for long-term growth, and 50% in bonds, which acts as a stable cushion for when the stock market inevitably takes a tumble. This balance is your anchor in the store. And step 2 is the automatic engine that makes this whole thing work. It's called rebalancing. Let's just walk through it. You start at 50-50. Now let's say the stock market has a great year and soars. Your portfolio might drift to, say, 60% stocks and 40% bonds. The rule is simple. You sell that extra 10% of stocks, which forces you to sell high, and you use that cash to buy bonds, automatically getting you back to 50-50. This system forces you to systematically sell what's gotten expensive and buy what's gotten cheap. And now, for what is truly the defensive investor's secret weapon, dollar cost averaging, or DCA. This is, without a doubt, the simplest and most effective way to turn market volatility from a scary threat into a huge advantage. You just commit to investing the exact same amount of money every single month, no matter what. Let's look at the numbers to see how this plays out. You decide to invest 100 euros every month. In January, the price is 10 euros, so you get 10 shares. But in February, Mr. Market has a panic attack and the price drops to 8 euros. Your same 100 euros now buys you 12.5 shares. You see, when the price is high, you automatically buy less. When it's low, you automatically buy more. Over time, this disciplined approach dramatically lowers your average cost per share. You're turning market volatility into your ally. So when you combine all of this, a balanced portfolio, automatic rebalancing, and dollar cost averaging, what you've really built is a fortress of discipline. The goal here isn't just to get great financial returns, it's to achieve emotional control and ultimately peace of mind.
So let's just boil Graham's entire philosophy down into 3 simple key points. 1. Remember, you are buying a piece of a business, not just a stock ticker. 2. Diversification is an absolute must because no one can predict the future. And 3. The most important rule of all, the investor's greatest enemy is and always will be himself.
And that really leaves us with one final crucial question. The next time the headlines are screaming, the market is plummeting, and Mr. Market is panicking in the streets, you're going to have a choice. Are you going to let his fear become your fear? Or are you going to stick to your system, trust your plan, and take control? The choice is yours.